Hello guys, welcome to the new video. It's officially day 14 of using 50,000 capital for the 50 trading day. So in this today's session, we will analyze the Nifty for the upcoming sessions and I'll be discussing about the trades that I have taken in the today's session. So let's start ahead with the today's video. So the today's session, because the budget, there was like early morning we saw gap up, and then there was a in the first candle itself there we saw a sell off, and almost all it was trading at the yesterday's high of around like 221,700 odd levels. So almost all at the all the time during the daytime it is almost trading around 21,700, wherein I had posted you in the telegram about the premium of the 21,750 P and the C, wherein the both premiums were almost around 43 to 45 rupees. So wherein our range was coming around 21,750, and we had a call side we had around 45, and even on the put side the premium was 45 rupees. So almost all 21,700 roughly on the downside, and 21,780 rupees, 795 rupees on the upside. So that was a zone wherein the Nifty was anticipated, it was supposed to trade, and wherein in intermediate pullback also we saw Nifty went down to around 21,700 70 odd levels, and then from there it has been consolidating. And the important thing is that you would have made sure that this 200 moving average, the Nifty had always taken support from the, even though there was a huge sell off, but there was always a bounce back from the 200 moving average. So this is going to be crucial for the coming sessions, because if you see there is a trend line now formation of this pattern, and there has always been a rejection from this trend line. So this ultimately this zone is going to be very important, because the price is trying to squeeze out. It's becoming narrower, and then either on the either side the breakout or breakdown will give a huge momentum. But however, the important thing to watch out is this trend line for now. If I'll let in, I'll mark this trend line over here. So, and moreover, if you see the particularly at this point, there is a zone wherein Nifty had taken resistance on. Let me this on Tuesday. So the high was around 21,800. So I won't be bullish as of now. Like the price pattern is bullish, but unless and until I won't be going on the long side. If the Nifty gives a closing about 21,800 on 5 minute basis, at least it should sustain around minimum three candles to four candles, and then if after that I'll be thinking of going long. However, for now I'll be just waiting and watching. If already at this pattern, what is the pattern formation you see here? There was one top over here, and today's price action also we had another top at this point. So this pattern, what we are saying, is kind of a pattern, wherein already Nifty has taken resistance from this point crucially from in the today's session, and we saw a huge crackdown. So as of now, let me go to the 15-minute time frame. It will be much more clear. So then ultimately the neckline. However, what is the important thing is this neckline should get broken down. If you see, this is a pattern wherein this is first top T1. Let's call it as T1, and this is top 2. So from this point already we have seen a bounce back till this point, and the correction is not that huge. It is going in the almost in the sideways consolidation. So important thing is to watch out 21,680 for from the price action what we have seen from today's session, and even in the yesterday's second half portion we had seen 21,680 as the price wherein Nifty had taken consolidation, and then from there it is almost in the same zone. So for now this is kind of double top pattern formation, and we need to keep a watch. And if Nifty gives a closure about 21,800 and 800, not exactly 800, 820 to be precise, because the wicks are there at this point, exactly around 813. And also over here, if I clear this, the high was around 832. So today's high is going to be important, 832. So once we get a sustenance above 830 plus or 822, 830 zones, then we can think of going long. For now, keep a watch on the 200 moving average, and then we can I'll be updating about if there are any trades in the However, I am not updating the direct the call, buying call or the put. I'm just uploading the chart so that you will be able to take decisions independently along with the chart indication. So coming to today's trade, which I had taken early morning, I was trading for, I was kind of testing few things by buying some puts or the call. But however, the one trade that was important wherein I was anticipating was the zone wherein I bought it at 21,500 P. I had bought it at around 1028. So exactly, I think around this point wherein I was anticipating exactly around 1028 in this candle because Nifty went on total sideways zone over here. So my intention was like we had seen a previous rejection on Tuesday wherein 21,803 or 807 was high. So my anticipation was that it might give a resistance, take resistance, and then we might see a crackdown. But however, this went on in a total sideways consolidation. Hence, I cleared this position and nothing much. I was very strict with my SL today because of being a volatility. So I squared off this position and then even I had posted you about this trade for 21,700 P, wherein this trade was a good, but however I kept my trailing stop losses and moved on. So however, I bought at 11:55 exactly. If I go to the chart, 11:55 is this candle wherein yeah, over here I bought the 21,300 sorry 21,750 PE for the monthly expiry, not the weekly expiry nor the next week, but because of the volatility and the decay factor I went on to the monthly expiry trade, and I squared off my position with almost like 1200 or 1300 profit, I guess. So if I go to my position over here, if you see, this all trades that I have taken is like some kind of a I was trying out the things, but I was not able to capture the entire movement and kept my trailing stop loss so that whatever this profit are there, it's not, it is going to be charges, it will go through the charges, that's all. But however, I made a in monthly expiry trade, I was able to gain around 1200 and another 21,750 for the next week expiry. I was able to capture around 2,000 or 100,000 rupees. So overall, cumulatively, I was able to capture around 3,000. But the important thing is today is let me show you the option chain for the coming week for the 8th of 8th of this February. So if you see today's the premium decay has been very much compared to the usual day we see the premium decay because of the budget anticipation. The premiums were short of, and also the India VIX was very high, around trading around 16. So because of that, there was a lot of IV. So today, as the event has got over, the premium have decayed too much. If you see 21,700 as of now, if you see that 172 and 165. So the range is coming out to be 21,000 uh, 870 on the high side and 21,000 around 65, you know, 65. So around this is the zone which is going to be the important, and I think still there will be a premium decay thing happening tomorrow, maybe slightly, but I don't know. Still, I feel this price what we are seeing is 160 to 170 rupees is bit higher for the at the money strike price, and even if you see far after the money strike price for 21,800, it is trading at uh, 22,000, 222. So the premiums are a bit high comparatively on the side of the 21,800. So let's see for tomorrow session, there will be a little bit of premium decays or the premium will get adjusted accordingly and then we can take a call. But for now, the premium still for by the end of the closure, there is a slight negativity in the data, but it's fine. If you see 21,700 is holding 36 lakhs and 21,700 is holding 31 lakhs. So for now it is a bit lesser, but tomorrow we can see a update about this much more clarity. But for today, for tomorrow session, keep eye on this trend line particularly, and then 21,800, 830 zone is going to be important. So that's it for today's video, and hope I see you in the next video. Thank you for watching. Bye.